Okay, so we have a New York open trade here on Nasdaq. It is just a few minutes after 9:30 New York time, and looking for a short here. Hopefully down to London's low of the day. But we'll see. Let's see how much progress we can make here. Not the most volatile New York Open, but we're treading along here. So we just continue to watch and wait and see what happens here. Not even beyond my entry point yet, so I'm just trying to be patient. That's it. So I don't know if I can. I don't even know if I want to mess with this. I might fuck around. So one of the reasons why I don't often like hold the open for this long. I'm usually a little bit more like cautious about the open, but the reason I'm holding this trade for so long is that we in the higher time frame we formed I mean, if you happen to like watch my trades kind of consistently on a daily basis, then you remember yesterday we were talking about the fair value gap. That was the bearish fair value gap that was created in the lower time frame, or I'm sorry, in the higher time frames. And it's like a big juicy one. It's a big bearish fair value gap. So as of today, we have finally pulled back into that fair value gap 50% of the way. So it doesn't mean that it has to happen, but typically that I look for a fair value gap to be pulled back into about 50 to 62% with the Fibonacci retracement tool before I truly expect a reaction from it. That's a rule that, or I guess that's something that I more commonly have seen in the lower time frames. I don't often pay that much attention to fair value gaps in the higher time frame, to be honest, but I'm taking that same rule and I'm applying it to the higher time frame. So as of today, we've now pulled back at least 50, a little greater than 50% into that fair value gap. So in addition to that, this morning, we'll see 18263. This general area right here was our London high. So we ran the liquidity there and we're inside of a bearish fair value gap in the higher time frame. We have an overbought stochastic in the smaller time frame, and we're pulling out of a bearish order block. So those are my reasons for entering this trade here and holding the trade patiently through the open. And again, I'm just looking for a retracement down to the low that was created in the London session. That's my premise as of right now. It doesn't mean that it is going to play out that way, but those are the things that support why I'm in this trade and explains what I'm looking to see happen. Okay, so the London low is marked. This is the London low right here, this line. So this is where my limit order is set to. And we'll see. Okay, so I always like to play devil's advocate with my trades, meaning there's reasons that support why I'm in a trade, and then there's also things that I'm aware of that I believe, could mean that I'm wrong, right? So what else could I see happening in this trade that is not favorable for me? Okay. I think there's two things that I'm just kind of like generally concerned about. So, number one, I really, really enjoy trading order blocks. So that's primarily what I trade, and then there's just a bunch of things that I kind of build around the order blocks to try to get even more, like even more accuracy in the decisions I'm making, the timing, and all of that stuff. But in this particular area, we have order blocks and we have Fibonacci retracement levels that favor both sides, both bearish and bullish. And so normally what I see when that happens, like when you've got these really, when you have these significant order blocks and these retracement levels just kind of like stacked on top of or in between each other, you have to be like very meticulous about the direction that you choose if you're going to trade in that area. Because if you have a bearish order block like directly on top of a bullish order block, then a lot of times what you'll see is it'll hit the market will hit that bearish order block. But as soon as it starts to push down and we get into the bullish order block, you'll just see it fights, right? And we see the market start to kind of move sideways, and there's kind of like this battle back and forth and until one direction is chosen, and then we break and we get momentum moving in a particular direction. So that is what I'm looking at right here. The reason I've explained why I chose bearish over bullish in this particular instance. But that would be one thing that concerns me, is that I know it's going to be, even if it does go in my direction, I feel like it's going to be a little bit of a battle. Like it won't be like a smooth drop because of that. And I've just seen that happen repeatedly. Okay. Another reason or another thing that would concern me about this trade at this particular time. What was the other thing? So the order blocks, the fib retracement levels, and lastly, so there in the 3-minute time frame, which is what I'm looking at pretty like I'm always looking at the 3-minute time frame and typically the 5-minute side by side with it. But in the short term right now, it does look like we have like an uptrend starting. It's not very strong, but like I can definitely, I wouldn't be shocked if I saw it just like shoot up from here. But the reason why I wouldn't want to take a long from this spot is because, again, like just right up here, we've got like that bearish order block. So even if we did get a pump, it has to contend with that area. And I just don't know that, I don't think it has enough time to gain enough momentum to be able to kind of shoot through there. And on top of that, we've already kind of like hit the liquidity in this area. So to me, it seems like it would just make more sense that it would dump and go down and we would sweep the London low. All right, but those are the two things that, do catch my attention and make me think like, oh, that could be problematic in this trade. But overall, obviously, I'm more bearish right now than I am bullish. At least for now, until I see that London low get tapped. And the interesting thing too is we have a London low from today, which we've not had a liquidity sweep on. And we have a London low from yesterday, which there was no liquidity sweep on. And we have a London low from April 5th, which there was never a liquidity sweep on. It's not very often that you see like so many lows or highs just go untouched. This is it, like it's stacking up. So I think we have a lot of reasons to go down. So anyway, so that's my premise. I'm babbling at this point, but that's where my head is at. That's what I'm thinking. And I'm basically just hopefully this trade continues to move in my favor, and I'm just waiting for an opportunity to be able to add a break even stop, which this actually seems like a good time to do so. Okay, so we'll add a break even stop there and get rid of that original stop loss there. It's a little bit premature, but I mean, I've given it some time. And I entered this trade at the open, and we're now after 10 a.m. New York time. So yeah, I mean, I would like to just kind of see a nice push down, and if not, I would definitely like to just remove the risk. So we'll see what happens. Let's see if we can get the targets hit here. It's a tight stop. It wouldn't be that crazy if it pulled back and knocked me out of the trade, but I'm okay with that. We wait. And so even though I develop, like a premise to what I think, what I believe, what I'm looking for, I still watch the trade, all my trades for contraindications for staying inside of the trade. So if I see something that starts screaming at me that I should get out of the trade, then I'll do that. So that's typically what I'm watching for, like after I have a break-even stop in place. So I'm looking at right now in the 5-minute time frame. I pay a lot of attention to the 50 moving average because we experience a lot of bounces on the 50. So yeah. So if we bounce too hard, or if we start getting kind of stagnant around the 50 moving average, then I would probably expect to get stopped out of this trade probably. And let's see, so we're looking at the 3-minute right now. Let's look at, where do I, if we go out to custom time, so if we look at this 10-minute chart here, if we go all the way back over here, you can see this really big fair value gap right here that was created. And so again, as of today, we're kind of like right inside of that 50% pullback area, just to give you a visual. But let's go back to the 3-minute. Oopsies. I didn't mean to put that there. All right, we have 2 minutes left on this 3-minute candle here. Let's see what we get.
Stop field.
Alright, so I'm seeing signals that there's a good chance that we could like pop up from here. So I'm just going to keep my stop right there. And if it moves down, then great. And if it pops up, then we're out. And let's adjust this also to match our current volume. I'm pretty sure this is going to hit my stop.
Stop filled.
All right, so there's that. We're going to cancel all of our other existing orders like 800 times to be sure. And we are going to sit and chill and wait for the next opportunity to take a better trade.